markets in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me, as always, Sonia and Anuj. Well, actually, the markets have opened with a bit of a green. They opened a little bit in the red, the Asian markets, but now in the green. And that's largely led by oil stocks, not necessarily very positive for us. The IMF numbers perhaps have already been digested because a whole host of World Bank and OECD have already cut numbers. But nevertheless, when China opens tomorrow, that will certainly rankle. We have a lot to consider today, whether Asian markets will digest and prepare for China's opening tomorrow, whether some correction could be there in the markets because you have to prepare for China's opening after a long gap. So although the markets are showing a bit of green now, there are some clouds, you'll have to say that. Morning, both of you.
Hi, Lata. Good morning. Hi, Anuj. Morning. Yes, indeed, and we've been facing a bit of a hurdle at that 100-day moving average of 82.24. So that perhaps will be a level to watch for. And also, there has been buying by FIIs, but selling by domestic institutions. So that could keep the upside capped for our markets. But Lata, what about the IMF data itself? As you pointed out, perhaps it's been digested. But once again, that global growth slowdown worry pops up.
Oh, absolutely. And if you're only looking at these numbers, the IMF numbers have been cut from 3.3% global growth to 3.1%, but they were 3.5 in April. So if you look at, over a 6-month period, the IMF has reduced global growth by almost half a percentage point. And that tells, maybe you would say that the markets were ahead in discounting it, but even this IMF downgrade comes with China's numbers not being changed at all. That has been retained at 6.8%. And yesterday, the economist Maurice Opfeldt's argument was that we were ahead of the curve in China. We always knew it wouldn't be 7%. But on the street, the numbers going for China are 6.5%. And yesterday, you had PIMCO saying that they expect the 2016 numbers to be south of 6%. Now, all those doomsday profits now seem to be a little more relevant after you see the numbers from Yum Brands, which came after market hours on Wall Street. That was much lower than street expectations, primarily because of China's sales falling. So maybe the IMF's downgrade of global growth and of Chinese growth is not enough. And we have to really wait and see how China opens tomorrow. Investors will probably want to reflect and express their worries over the data that is coming out of Yum Brands and other data. My sense is that we have to be prepared. It could be bad. And the second bad news for us is really crude. If Russia indeed is negotiating with OPEC, now whether or not the negotiations bear any fruits later on is immaterial. I think the markets will now have already started putting a floor for crude prices. The immediate global cues on both Chinese growth and on crude prices is slightly negative for India. That you will have to say. Today, the global cues need not necessarily be positive.
Oh yes, and for Yum Brands, I was just mentioning that discretionary spends globally are going down, and of course that will have a ripple effect on markets like our own as well. But Anuj, hi, morning. The internal that stood out for me the most was the selling by domestic institutions. We haven't seen that in a very long time. Would that make you a bit cautious?
Morning, Sonia. Yes, I mean that data point should make you nervous if you are a bull, because anecdotally DIs have got a bit of a medium-term direction of the market right. They've been buying with a bit of medium-term outlook, and that's a bit of a near-term headwind. But I think today is an extremely crucial day in deciding the trend of the market. For the last 2 days, I have been very comfortable about saying that this is a market in which you should buy dips, this is a market in which you should buy pauses. But now, you are so close to such a big resistance zone of 81.80. Today, what you should do, I think today, 2 things. First is focus on a lot of mid-caps. A lot of mid-caps will fly today. Second, this zone is important. So you do 2 things. Either you take a punt and take long position in first thing in the morning, hoping that if this resistance zone is taken out, then the upside for the market is big, towards 8400, towards the 200-day moving average. Or you wait for a bit of a dip towards 8100, see if 8100 is holding just like yesterday, and then take a long call for again a move towards 8180 or 8200, the 100-point move. That move is still feasible in the market. But, couple of points. the biggest index losers in this relief rally have been all the big losers of, the biggest winners have been the big losers of the erstwhile fall. ICICI Bank, Larsen and Toubro, Reliance, Tata Motors. Some of these stocks have rallied 15 to 20%, which is indicating that this is really a powerful short covering bounce. Now, for how long can it continue? Can it go above 8200, 8300? That I think would be the key point. FIs have been buying index futures for last many days. Yesterday also there was a buy number in index futures. So in last 3 days we have seen 3,000 crores of index futures buying, which is telling you that maybe there's just some more juice left in this current rally. Whether it peters out at 8180 to 8200, which for me is the most important resistance zone, or then it makes one more move back towards 200-day moving average. That really is the next 100-200 point. But there's one thing which is clear, that this is a powerful short covering and a counter trend move, and the overall trend for this market still remains on the way down, and maybe after earnings season the market resumes its downtrend. Yesterday also, after a long time, we saw first indication of some protective put buying. Yesterday 8100 and 7700 puts were very active, and a simple arithmetic tells me that yesterday 8100 put was bought and 7700 put was sold. Why do you do that? You do that because you want to buy some protection. At the same time, you don't want to pay too much premium, so you hedge yourself by selling the lower level put as well. The combined premium is somewhere around 85 rupees, and you start to make money if the Nifty slips below 8050 thereabouts, and then you make a lot of money up until 7700. The other internal which stands out is the mid cap index. It's now within 6% of previous high, reiterating that this is a market which is still a bottom up stock picking market. If you get stocks right, you'll still make a lot of money. But this is a market which is again giving you an exit opportunity from junk stocks. A lot of junk stocks have started to rally. As good an opportunity as any to really get out of some of these stocks, move into cash or move into quality stocks, because this market has still not given you enough indication that the worst is over. This market still is giving you a bit of a hint that this is still a counter trend rally. At some point that would be sold into. For me, the most important resistance mark still remains the 8180, which I spoke about yesterday as well, which was also yesterday's morning high as well. So that remains the resistance
What
point.
is the confidence in the mid caps? I mean, I take your 8180, which you have been saying for some time now will be a powerful resistance. But you said mid caps will fly. Why that?
Mid caps will fly because, when traders get into a psyche that this market does not have too much downside in the near term, downside may well be limited at 8100. If the Nifty starts trading below 8100, then that mid cap outperformance would be out of the window. But if the Nifty takes support at 8100, but with the knowledge that the upside is capped at 8180 or 8200, you want to look at individual mid caps, and that's why I believe that at least in the first half the mid cap should do well. In the second half, again the whole theory of China opening tomorrow, that also will be an important theme. So you may want to book some profits. So that's why I said in the first half the mid cap should outperform. In the second half it could be dependent on what's happening with global cues. And I think a lot of crude related stocks should do well today. Stocks like KN, ONGC, some of these stocks should rally in today's trade.
All right, Anuj, thanks for that. Let's do one thing. Let's get one guest in to give us his